This is Gustavo Chamorro, Director of the Digital Media Center, and you are watching Eye on Business.
Welcome, I'm Kevin McDonald and you're watching Eye on Business. With me today is Richa, and he is a serial entrepreneur, a member of the TehcCoastAngels, and managing director for Trenchant Ventures. Thank you for coming in today, JJ. I really appreciate it. So why don't you explain what a serial entrepreneur is, for those who don't know?
What a serial entrepreneur? A serial entrepreneur is a person that is willing to take risk and is willing to take it more than once. In my experience, I have started 6 different companies. First one was really hard to start. Second one was harder, and it keeps going from there. But I've had fun in every one of them.
So just to give the folks an idea of what your life is like now, you know, the TehcCoastAngel, I understand, is a group of small fund investors. What is Trenchant Ventures about?
Trenchant Ventures is a private equity firm. Okay. It started about a year ago, and we look for companies that are in the lower middle market, meaning companies that are under $10 million in transaction value, and they're in distress or they're underperforming. What we do is we look at them and assess their value. If we can buy them at a value price and we see great potential growth, then what we do is we buy them, restructure them according to our experience. We have a great team of 8 people on board right now, and then we sell them.
So slightly different from a couple of the other groups we've talked to in the past. It sounds to me like you're in much more of a bail out, grab the asset that's worth the value, and then continue forward with that asset versus leaving the management team intact and allowing them to continue to go forward. Am I correct in that assumption?
It depends on situation. So again, it's going to be a value buy. So sometimes we keep the management in place, sometimes we keep some of the management in place, sometimes we replace the entire management. But in most situations, what we do is we would like to keep the tribal management or the tribal knowledge in place, so that we're not really completely revamping and creating a whole new business from scratch, because we're looking for businesses that have demand for their service or for their product. So it depends. Each situation is going to be unique, and we're going to be very opportunistic about each business we look at.
Do you see that your opportunity has changed dramatically in the recession, or has it been positive or negative for your position?
Last year, looking at different businesses, it has been we were looking at businesses that were really, really bad, and they're not restructurable. In today's market, we see better companies, and there's the places where you go to find funds are more available right now. So during the 2009, it was really very hard to find the right companies that could be fundable. In today's market, we're seeing better companies, and at the same time, there are more ways to find funds for these companies.
So as an equity firm, it sounds to me like you're doing a couple of different things. Are you providing your own funding, or are you agency? I mean, what is the structure that they can expect when they come to see you?
Yeah, the structure of we have a little bit different structure than a traditional private equity firm. Okay. So our structure is we take we have a fund that we're building right now. We're still in the midst of building the fund. What we do is the fund, we create a whole new entity. And then what we do is we buy the assets of the business that we're trying to restructure or acquire. That
limits the carry forward liability, gives you the freedom to change. I get it. Okay.
That's right. So the fund loans the money to the new entity, and then in return, the fund is first of all is a first in line as a secured lender. Second, they get equity into each business.
So would there be a cash equity for the old business owner, or is it cash out, or does it just vary?
It's going to vary. It may not be a cash out. The owner of the business may get some equity and may stay on board. It depends. On each situation is going to be different.
Or debt relief. I know a lot of small businesses would just like to get out from under the history and the credit issues that come from it. So you're with TehcCoastAngels, and you have this other organization. Can you tell me how the decision is made and which venture it would go into? Is it where they come in through the door? Is it the variance of the business itself? What would make the difference in choice there?
Trenchant Ventures goes after established businesses.
Okay.
So versus TehcCoastAngels, we look at early stage startup businesses. So really, they're completely different. So in TehcCoastAngels, we are looking at companies that very early or somewhat early in their life, from an idea all the way to having some revenues and some customers in place. In Trenchant Ventures, we're looking at companies that have a sound business model, that have a demand for their product or for their service, and then, but through a series of mismanagement, economy, they've gotten to a point where they cannot sustain running the business, and they have too much debt. They have, it could be a series of many different aspects where we go in there and take over.
So in recent years, I know we've seen a lot of companies that were well run with some cash flow challenges, and historically had been fine because they'd been able to get their credit lines and extended based against their invoicing or whatever the issue might be. And then, of course, when the banking system froze, many of those companies were locked out. So you're seeing probably a significant bit of opportunity right now, are you not?
There's a lot of opportunity out there. But with our model, we have to be very opportunistic because we're trying to find a value buy, and we're a company that has a growth potential.
How difficult do you find it to convince the owner that it's not worth as much as they believe it is, even though they've got their whole life into it?
Well, this is a very difficult question, and it's very difficult for entrepreneurs themselves, especially if someone has had the business for 5, 6, 10 years, and now you're saying we're going to take over. So we expect that we're going to run into some issues with these entrepreneurs, but it's the difference between having the entrepreneur losing the business completely, turning off the lights, and shutting down the business, versus keeping the business, probably saving some jobs, and possibly the entrepreneur keeping a piece of that business.
Credit, reputation, and other things that can be gained is all. Do you see any palpable trend at all in an upward tick at all? I mean, I know the government would all like to make us believe that it's positive out there. We get sort of a mixed sense because I run a technology company, and we've got a very positive sense, but we also know that many of our competitors are not doing so well. So what is your sense of the general market right now?
My sense is that it's still not a great time right now. It probably won't be until the middle of next year at best. Last year we heard middle of 2010, and now we're probably hearing, sometimes some people are saying it's by the end of this year. I think it'll probably drag into next year. So it's still not a great time.
Do you see a double dip coming, or do you believe we're going to stay flat? I mean, what would your personal opinion be on that?
I think, again, you could never predict this, but I think there's no double dip.
Okay, well, it's good to hear. If you were to look at the current market and you were to have to choose today as an entrepreneur what to move into, I know that, for example, we've got a massive growth in the senior population, technology, of course, in the green area. I mean, if you were to give people advice to where to stay away from, let's start with that. Maybe the oil business. Do you have any advice for folks? Because this really is for folks that are out there struggling, some of them, and some of them that just have great ideas and want to start a business.
Healthcare is big, and it will stay big for probably a very long time. I think the next bubble is the green. Everybody talks about green energy, green. We need to find a solution, but there's so many solutions out there and so many companies starting around the green. I think it's the next bubble.
You and I are in agreement on that. I also think it has it's the snake oil of the century in some ways, because frankly much of what we're seeing really isn't real. It's just a marketing term and so on and so forth. So healthcare, let's go there for a minute. You see market opportunity, but do you see challenges and limitations with the fact that the government is effectively working to take it over. They got pushed back, but I don't believe the government ever gives up on anything. So, you know, what risk does an entrepreneur have, or even a person going to college today, where their salary limitations are going to apply, there are going to be compensation limitations, limitations on liability, et cetera, et cetera. Do you ultimately think that's a good business to go into in the long run? Maybe not the next decade, but...
Well, when I'm talking about healthcare, I'm thinking healthcare technology or healthcare, new technology, new ways of dealing with healthcare to make healthcare better, more efficient. So if someone can really, if there are a lot of solutions out there that I've been seeing, and some of the solutions make the communication better, some of the solutions make interaction better, make things more efficient. So that type of business will have, regardless if the government takes it over or not, will have a place.
That's interesting you say that, because I know that they're trying to go more electronic transaction. They're also pushing at the same time strict compliance. They've added unbelievable fines for those that violate the HIPAA regulations under high-tech and ARA. And I'm in agreement with that, because I think compliance, for example, in technology that enables that is going to be pretty phenomenal. Yeah. What do you see as a trend here in Orange County? I mean, we used to have the mortgage industry here. And it was substantial. What do you think, or do you have any sense of what's going to be the next bedrock for our economy here?
Orange County has been a technology hub for a very long time. You know, talking about Orange County specifically, you know, I don't know specifically what's the best, but there's a lot of medical device companies in Orange County. You know, San Diego, there's a lot of biotech. You know, you see in LA a lot of digital media type companies. San Diego is a lot of software and a lot of medical device that I've been seeing.
That's interesting. You know, it's funny you bring that up. I never really imagined that the public doesn't realize this, but we hear Silicon Valley is the center, the tech center. And in fact, I helped and proposed ACR 52 that declared California the tech center of America. I don't know if you've got to see that. But we did it intentionally because of the 1 million jobs that are in California that average of $106,000 a year salary, almost half are south of Central California. And most people don't realize that.
I didn't know that.
So, yeah, so that's one of the things we're trying to do, is to say, whoa, investors, business people, colleges, let's come down this way too, because we have these resources and these great people. Let's talk about your best deal ever and your worst deal ever. Now, you don't have to say specific, but give me an idea of what the range of risk and return can be for a good investor.
Well, I can give you a personal, specific example. I started 6 different companies, and after selling my last company, I started another one, which was number 6, and I invested $500,000 in that company. And believe it or not, you know, you would think that I would succeed at that. I still failed. So that tells you very, very personal to me, where I started another company after starting 5 different ones, where I failed at it. Now, from an angel standpoint, which is really now I'm on the other side of the fence, I look at companies in a completely different angle. Specifically, I've invested in 2 companies so far, and none of them have had an exit yet. So I don't know if I could tell you the best or the worst. But from an angel investor standpoint, I look at companies from a different angle. I look at the entrepreneur. I look at how viable the business is. I look at there's a demand for their product or service. Do they have any customers? What is their distribution model? How can they reach these customers? Because if they have an easy distribution model, they will probably succeed if they have a good business model.